Happy Friday, everyone. Thank you for tuning in to this edition of Business Daily. I'm Kim Young-gil in Seoul. Let's get started with a look at today's highlights. Korea's current account surplus hit a record of over $12 billion in September, thanks to a huge surplus in goods account. The Bank of England raised its key interest rate for the first time in more than 10 years, a landmark move after borrowing costs had slumped to the lowest level on record. Stay tuned for these stories and more. Starting off with domestic news, the Bank of Korea has announced the country's current account figures for the month of September. The data shows a record high surplus on the back of booming good exports. Our Park Hee-jun has the details.
Korea's current account recorded its highest ever surplus in the month of September, according to the Bank of Korea's report on Friday. The central bank's data showed that it reached $12.21 billion in September, compared with a surplus of a little over $8 billion the previous year. This is the first time the numbers have surpassed the $12 billion mark. The central bank attributes the expansion to an increased goods account surplus ahead of the Chuseok holidays, which reached $15 billion in September from $10.6 billion a year earlier. A recovery in the global economy was also an important factor. Meanwhile, the service sector deficit grew to $2.9 billion from $2.5 billion the previous year. Central bank officials said on top of a deterioration in manufacturing services, the drop in the number of Chinese tourists due to China's de facto ban on travel to the country and the rise in overseas trips widened the deficit. The primary income account surplus rose to $1.15 billion in September from a surplus of $780 million a year earlier. Exports also rose 25.5% on-year to $55.09 billion in September, with imports surging 20.5% to slightly over $40 billion. Park Hee-jun, Business Daily.
The Bank of Korea says it could face a policy dilemma when it comes to stabilizing inflation and deciding the right time to tighten monetary policy. The central bank's senior deputy governor Yoon Myung-sik made the comments on Friday during a conference at Seoul National University. He said although the local economy is on a steady recovery path, it will be difficult to raise the country's benchmark interest rate to mitigate the risks of capital flight. Yoon said this is due to the country's core inflation rate, which excludes volatile oil and food prices, remaining below the central bank's annual target of 2%. He called for a study on the correlation between growth and stagnant inflation, saying it's a problem not only in Korea but other developed countries like the U.S. One of the main pillars of President Moon Jae-in's economic growth plan is innovation in the private sector, with an emphasis on startups. On Thursday, Finance Minister Kim Dong-yeon announced the government's plan to help small businesses invest and grow. Our Kim Hae-sung reports.
A new plan to nurture innovative startups. The Korean government has unveiled its 3-year plan investing 30 trillion won or $27 billion to help startups in the country. At a ministerial meeting Thursday, Finance Minister Kim Dong-yeon said the government will help create a second venture boom through startups led by the private sector. It comes in 3 main parts. The government will expand venture funds and create a venture-friendly environment to build a virtuous cycle of startups and investment. There will be a $9 billion innovative venture fund for startups and another $18 billion lending program that's funded by state policy lenders such as the Korea Technology Finance Corporation. The fund will loan money to companies for mergers and acquisitions and for investment in equipment. The government will also offer tax breaks. For instance, startups can get tax exemptions on profits gained from stock options. And to make it easier for startups to acquire enough initial capital, the government will ease crowdfunding regulations. Kim Hae-sung, Business Daily.
Moving on to our coverage of the markets, we have our markets contributor Lee Jie joining us on the line. Hello, Jie.
Hello, Myung-gil.
Jie, so how did local stocks perform on the last trading day of the week?
Well, Korean stocks traded nearly flat throughout the day, with investors continuing to take profits after the market posted new record highs earlier this week. The benchmark Kospi rose 0.46% to close at 2,557.97, a strong rebound within the day, and tech-heavy Kosdaq rose 0.89% to close at 701.13 this afternoon. The automobile and financial sectors led the gains, with top car maker Hyundai Motors rising 0.94%, and its auto parts affiliate Hyundai Mobis moving up 1.88%. Kia Motors also closed 0.28% higher. Samsung Life Insurance increased 1.49%, KB Financial advanced 1.35%, and Shinhan Financial also traded 1.39% higher. Market bellwether Samsung Electronics fell 1.19%, and leading steelmaker POSCO climbed 0.77%. Naver also advanced 0.82%, while messenger app Kakao gained 1.67%. By sectors, venture capital firms outpaced the broader market with a jump of 7%, followed by health management technology and biotech, while electric products, semiconductors, and publishing companies were on the downward slope.
And Tia, tell us how other Asian stocks performed today as well.
Sure, Myung-gil. Asian stock markets are mixed today on the last day of trade, picking up what seems to be mostly positive cues overnight from Wall Street, with investors looking ahead to the U.S. monthly jobs report for October set to be released later in the day. Apple suppliers in Asia advanced, with the tech giant forecasting better than expected revenues for the holiday season. The markets in Japan today were closed for a national holiday. Greater China markets were mixed. Hong Kong's Hang Seng Index was up 0.31%, while mainland markets recorded losses. The Shanghai Composite slid 0.99% earlier in the day, and the Shenzhen Composite lost 0.68%. The Caixin Services PMI for China in October was released today, coming in at 51.2. China's official figure for non-manufacturing activity has been registered at 54.3. As for down under, the Australian dollar took a hit and bond yields headed lower after retail sales data raised doubts about the strength of the economy.
Right, now back on the local front, the Kospi Index has been under quite a spotlight throughout the week. What are analysts saying about its likelihood of hitting the 2,600 mark, Jie?
Well, Myung-gil, this is true. It's each new day pushed the Kospi Index in new unprecedented territory throughout this week. Many are crediting this to a strong semiconductor sector, as well as an announcement on greater shareholder returns for Samsung Electronics. The geopolitical uncertainty surrounding North Korea has also eased somewhat in the last couple of weeks as well. Analysts are saying that there is indeed a possibility that the benchmark index could hit somewhere between 2,650 and 2,700 later this year even. Sources say what they call macro momentum, the IT sectors as well as steelmakers, chemicals, and mechanics could lead to a strong end to the year. This has been Lee Ji-hye for Business Daily.
There has been rapid growth in the number of irregular workers here in Korea, especially among the elderly, with the total now exceeding 6.5 million. According to Statistics Korea, the number of non-regular workers in the country increased by 98,000 compared to a year ago. They now account for nearly 33% of all wage earners, 0.1% higher compared to last year. On a more concerning note, 1 out of every 5 irregular employees are over the age of 60, having risen 4.7% on year. Starting next year, internet-only lender Kakao Bank will launch a new service to provide loans for jeonse and monthly rent deposits. The company announced the new products at a press conference earlier today, commemorating its first 100 days. Jeonse is a type of rental contract that is unique to Korea, requiring tenants to pay a large lump sum deposit. In addition to the new loan service, customers will also be able to withdraw money from convenience stores and ATMs via their smartphones starting in December. Through the end of last month, the bank extended more than $3 billion in fresh loans, while averaging 43,000 new accounts per day. Kia Motors' two compact vehicles, the Soul and Sportage, have won the highest safety awards in a U.S. crash test. The Korean automaker says the two models took home the top Safety Pick Plus award for performing well in crash worthiness test carried out by the Insurance Institute for Highway Safety. The 5 tests included small front overlap, moderate front overlap, side roof strength, and head restraints and seats. In order to earn high safety marks, vehicles must also be equipped with advanced front crash prevention technology and good headlights. U.S. President Donald Trump has officially nominated Jerome Powell as the next chair of the Federal Reserve. Considered a soft-spoken centrist when it comes to interest rate hikes, he will replace Janet Yellen when her term ends in February next year. Our Elia Kim has this report.
Ending months of speculation, Jerome Powell has been tapped as the head of the world's most powerful central bank. At the White House Thursday, President Trump announced this choice, calling Powell a strong, committed, and smart leader.
If he is confirmed by the Senate, Jay will put his considerable talents and experience to work leading our nation's independent central bank, which has the critical responsibility to set monetary policy and monitor our banking system as a whole. There are few more important positions than this.
President Trump also noted that his nominee has the leadership needed to sustain the economic process being made by the U.S.
I will do everything within my power to achieve our congressionally assigned goals of stable prices and maximum employment.
Powell, a 64-year-old lawyer and former investment banker, had served at the Treasury Department during the George H.W. Bush administration and joined the Fed as a governor in 2012 after being nominated by former President Barack Obama. He has backed Fed Chair Janet Yellen's general direction on monetary policy and is widely considered a centrist on monetary policy with a down-to-earth, pragmatic character. In recent years, he shared Yellen's concerns that weak inflation justified a steady and cautious approach to raising interest rates. Experts say the choice reflects Trump's position that a low interest rate policy is needed to achieve 3% economic growth. If he's ratified by the Senate, Powell will be the first Fed chair in 30 years without a doctorate degree in economics. Elliot Kim, Business Daily.
Time now for a look through some important global business news stories from the week. We have Eunice Kim joining us in the studio. Hello, Eunice.
Happy Friday.
You're right. So we have a nomination for the next U.S. central bank chief, and the Bank of England also raised its interest rates for the first time in 10 years. So it must have been a busy week for the global central banks, right, Eunice?
It has indeed, Myung-gil. And you know, this decision by the Bank of England last night is an important one as well as controversial. This as the risk of Brexit still looms over the biggest uncertainty over Europe's financial capital. Take a look.
It was a decision well telegraphed months in advance. The Bank of England's Monetary Policy Committee, in a 7-2 vote, raised interest rates by 25 basis points to 0.5%, its first upward revision since 2007. During a press conference after the meeting, Governor Mark Carney attributed the move to the UK's overshooting inflation, which rose 3% in September. He said consumer prices would further accelerate without an intervention by the central bank.
The MPC's primary objective is price stability, defined by the government as a 2% CPI inflation target. CPI inflation was 3% in September, and it's expected to have risen a little further in October. But it isn't so much where inflation is now, but where it's going that concerns us.
The BOE's key rate has fallen steeply since 2007, just ahead of the global financial crisis, which had pushed the UK economy into its worst recession since the 1930s. This latest 25 basis point revision up essentially reverses the emergency rate cut adopted in response to last year's Brexit vote. The November decision had 2 dissenters within the MPC and many among UK economists. They're concerned that wage growth was not keeping up to pad the higher borrowing costs Britons would deal with. This as they saw the forces pushing up the inflation figure as negative, a depreciating pound and a weak supply picture. The pound sterling further dropped on the news by more than 1% against the US dollar as the euro climbed. Investors viewed the rate hike as a dovish move, as Carney reassured any future increases would be at a gradual pace and to a limited extent, telegraphing just a couple more rate hikes through 2020.
Current market yields, which are used to condition our forecasts, incorporate 2 further 25 basis point increases over the next 3 years.
In its quarterly forecast, the BOE projects a weak economy in the medium term, given low productivity growth, in sharp contrast to growth being registered in the EU and the US. It estimates Britain's growth would hover around 1.5% per annum for the next few years, a significant slowdown from what was 2 to 2.5% before the crisis.
Now, as you mentioned, it really was a delicate balancing act by central banks. Now, did Brexit have a role in the latest BOE decision, Eunice?
Well, that's a good question, Myung-gil, and it does seem like the Bank of England is functioning on the premise of a good Brexit outcome. Having said that, though, they're under no illusions that negotiations with the EU right now aren't exactly going well. In fact, during yesterday's presser, Governor Carney said the decision to leave the European Union is already having a noticeable impact, as the inflation overshoot predominantly reflects the effects on import prices of the referendum-related fall in the sterling. The governor, who is tasked with navigating Britain's monetary policy through Brexit in 2019, also left room for a complete policy overhaul depending on the results of the Brexit talks and the UK's new relationship with its largest trading partner, the European Union, that is. This is earlier in the week, the Bank of England had issued a report on the potential impact of Brexit. It said it expects the UK will lose as many as 75,000 financial services jobs in the years following its departure from the EU, particularly if there is no specific deal on financial services. As you know, London is currently Europe's financial hub, with $81 billion in financial exports registered last year.
And finally, let's take a look forward, not just Korea, but Asia as a whole. They're preparing for a visit from the US President Donald Trump next week. And can we expect any substantial move forward within the bilateral relations that have really soured within this administration?
Right, not just with Korea, but with Asia as a whole, right, Myung-gil? A lot of people will be looking for a Trump-Asia policy direction, given that the U.S. has pulled out of the Trans-Pacific Partnership deal under his leadership, and of course, tensions with North Korea had really peaked for a while. Now, his Asia tour will be President Trump's longest stretch away from the States at just over a week. He'll kick it off with a visit to Tokyo, where among the items on the itinerary is a game of golf with Prime Minister Shinzo Abe. But many North Korea observers obviously will be watching for any advancements in the two leaders' stance on Pyongyang, especially as they have called for a more aggressive pushback over diplomacy in the past on North Korea. He will meet with President Moon Jae-in and address the National Assembly here in Korea before his meet with a strengthened President Xi Jinping in China. He'll swing by the APEC summit in Vietnam, where he could meet with Russian President Vladimir Putin before wrapping his Asia tour in the Philippines, where he's due to meet with President Rodrigo Duterte, but likely will skip the East Asia summit.
Well, lots of attention will be given to President Trump, who's making a state visit to Korea by any U.S. president in 25 years. Thank you, Eunice.
You bet.
An event like Pyeongchang Winter Olympics is something the whole country can get into as a world-class sporting event taking place in our backyards. But so far, interest hasn't been so great in terms of ticket sales, which were only available online. To boost sales, they have now become available offline as well in convenient public spaces. Our Won Jung-wan has more.
According to the Pyeongchang 2018 Organizing Committee, out of almost 1.2 million tickets available for spectators, only around 30% have been sold so far. Even more concerning is the large variation between ticket sales of different sports. Popular sports such as short track speed skating, figure skating, and ice hockey show excellent sales, but other events such as freestyle skiing and cross-country skiing are struggling to attract spectators. The organizers will be hoping that this will change with the start of offline sales in November. From the beginning of this month, offline tickets will be available from Seoul City Hall, Gangwon-do Provincial Office, and Gangneung City Office. But the important date will be the Monday, 6 November, when tickets from the events that have been sold out their online allocations will become available offline. As the offline sales begins, the design of the tickets is attracting much attention. There are 28 different commemorative ticket designs, each expressing the dynamics of the games through pictograms of each event. But the tickets have another special feature. As part of the push to make this Olympic the most high-tech games yet, electronic tickets are available as well as regular paper tickets. These tickets can also come as a QR code on spectators' smartphones.
There are additional benefits for ticket buyers, such as free access to the Olympic Park in Gangneung and the Olympic Plaza. Also, tollgate fees for private car owners will be waived, and ticket holders will be able to make early bookings for the KTX train starting from December this year.
With the Olympic torch arriving in Korea on Wednesday and the start of offline ticket sales, the countdown to the Games is most certainly underway. Won Jung-wan, Business Daily, Pyeongchang.
French telecom giant Orange is launching its own bank on Thursday, making it the first telecom company to do so. It's aiming to take advantage of its large client base to win a quarter of France's online banking market. Park Ji-won has more.
French telecom giant Orange is aiming to win 25% of France's online banking market in the next 10 years by taking advantage of the rising use of smartphones for banking activities and offering better technology than established lenders. The company has 21 million mobile clients, and the firm's CEO says 25,000 customers have already expressed interest ahead of the launch.
When you see the explosion of mobile use in France and the world, you wonder why not add financial services to mobile phone functions, especially as your mobile is becoming the way to pay for things.
This is the first attempt by a telecom company in a major developed market to launch its own bank.
You can open your account on your phone or go to one of our 144 stores which will provide the product. And then, once the account is opened, you will get a card and you will be able to use your phone as a means of payment and make the most of our group's advantages.
According to the European Central Bank, nearly 800 million online banking payments were made last year in France alone, up from less than 600 million in 2014, signaling that the market is still ripe for growth. Park Ji-won, Business Daily.
Ever since smartphones like Apple's iPhone and Samsung's Galaxy series became ubiquitous gadgets, folded phones appeared to be on the way out. But recently, flip phones are making a comeback equipped with better and smarter functions. Our Lee Ji-young has more.
Flip phones are making a comeback. This time, though, equipped with smart functions like internet connections and access to essential applications. Just look at LG Electronics' smart folder phone available exclusively through SK Telecom. According to a survey conducted by the mobile carrier, roughly 74% of those who purchased smart flip phones were 60 years or older, as they preferred tactile keypads over screens.
Flip phones may be more convenient for them as they've used it before. It's also the cost factor that's ringing a chord with consumers.
Along with older shoppers, market watchers say these folder phones are also a hit among younger buyers that prefer budget devices with just the essentials. Compared to the latest smartphone, which can cost near $1,000, flip phones can be bought for as low as $120 with the right phone plan. Samsung Electronics' Galaxy Folder 2 is also a well-liked gadget that shares the same price tag. It's been posting daily average sales of roughly 2,000 phones since its release in June. With the smartphone market becoming increasingly saturated, smart flip phones have emerged as niche products as manufacturers continue adapting to different consumer preferences. Lee Ju-young, Business Daily.
And that wraps it up for today and this week, but we'll be back next week with more top business stories that matters to you. So don't forget to check back with us then. Have a great start to your weekend and see you soon.